Welcome back, fellow investors and stock market traders. My name is Jeff, and so Tesla is set to report earnings Wednesday at close. So that's going to be around 3 o'clock my time. Guys, don't be alarmed. Sometimes I have noticed Tesla is late, and I've seen them delay the earnings report up to an hour before. And then in the case of NIO, they just simply did not have an earnings call. Very, very strange. But NIO and Tesla, obviously two very, very different companies. So what I want to talk about in this video, guys, I want to do an earnings preview for this upcoming quarter that's going to be reported on Wednesday. Now, the last 3 earnings reports have been an absolute disaster for Tesla, okay? Going back to the 1st of February, this was a $316 per share stock. And guys, by June of this year, was trading down to a low of $178. Now, that is not all earnings driven. There was a lot of different factors that come into that. I think one very big one is just negative media and negative coverage, okay? Remember, a lot of articles getting published, Tesla was going to be going bankrupt. And even though they have had some very, very disappointing earnings, the thought of Tesla going bankrupt is a bit ridiculous. I remember Citigroup and a couple of different banks were saying that Tesla stock was going to be going down to $100 and $50, and some were giving it like a $10 price target, all this ridiculous stuff. And so that was all around that time in May and June when you did see Tesla drop all the way down to $178. Now, I made multiple alerts to buy put options on Tesla, and I do very clearly remember when this stock got under $200, I say do not short Tesla anymore, okay? When it got a 180, 190 in that range, being I did not have my course Trade Alerts Pro, did not have it built at that time, but I do remember telling a lot of people here on YouTube, when Tesla gets under $200, get all your put options sold, get your short sales off of this thing because it's gonna go higher. Now, since that time, Tesla has traded up and is now in the $250 range, does seem to be maintaining very well. Let's take a look at this upcoming quarter. Let's kind of know what analyst expectations are going into this upcoming quarter. This video, I think, is going to be a lot of fun. But first, make sure to drop a thumbs up on this video. I appreciate all the support. And make sure to subscribe to the channel if you have not done so already. All right, so for quarter 3, analysts are expecting revenue of $6.45 billion and adjusted net loss per share of 46 cents, free cash flow of $32 million. Now, that probably just sounds like a lot of hoopla to most of you. You would have to go back through Tesla's balance sheet, look at their prior earnings, and kind of see their progress, obviously see where they have fallen off quite a bit for that to really register and make any sense. So here's what we're going to focus on. We're going to talk about the factors that will drive this earnings report either positive or negative to their earnings report, okay? Probably the most obvious thing, guys, 2019 delivery numbers. So Tesla has a 2019 goal of delivering between 360,000 and 400,000 cars, although analysts are looking for 358,000. Now, it was back in early October, that's when Tesla said it delivered 97,000 vehicles, which missed then expectations from analysts of 99,000 and the company's own guidance of 100,000. Now, reaching its 2019 goal for deliveries is under slightly more scrutiny. What can I give you my best word of advice in the automotive industry? Then we can even take another step into the electric automotive industry. 2019 has been very, very disappointing for pretty much all of these type of companies, okay? So I'm not sitting here saying, hey, load up on put options before the earnings call, because they could turn around and surprise the world. That's the thing about earnings. I like to make my decisions as far as options go after the earnings call, okay? That's a technique I really focus on in Trade Alerts Pro. For example, last week when Netflix had such a big number and what first seemed like a really, really impressive earnings report, Netflix was trading back into the $300 range. That's when I wanted to go short because I knew the numbers were nowhere near as impressive as they were being digested in the short term. So you can kind of see a similar setup with Tesla. Tesla and Netflix, those are two very fundamentally overvalued companies. If I see Tesla stock fly on a perceived good earnings report, that might be the time for me to go short on them. So I just like to wait and see what happens. Again, playing options on an earnings call, that is a flip of a coin, okay? You got a 50% chance of hitting, you have a 50% chance of your options losing all of their value. All right, so the second thing we're going to look at is gross margins, okay? Wall Street looks to each quarter's results for clues that the company is moving in the right direction. This is probably the section I am most concerned about, is gross margins. They have become increasingly more in focus, especially with a very inefficient company like Tesla. Now, experts are obviously calling for gross margins to tick up. There's an expectation to see 20% or higher gross margins, which would markedly be better than the second quarter's gross margins of 14.5%. So do I think that's going to happen? Probably not, okay? Where Tesla does usually disappoint in this category, I think 20% is being a little too ambitious. Because guys, keep in mind, this is a growth company. They spend every single dollar they make. One of the most important factors driving the margin is what portion of deliveries are from higher priced vehicles. Tesla said that 79,600 low-priced Model 3s, which cost $35,000 versus Wall Street's expectation of $78,500, okay? Tesla sold fewer than expected Model S and Model X, which sell for $75,000 to $81,000 respectively. This obviously pressures gross margins and restricts Tesla's flexibility to be profitable on a total net basis. Like I said, with the popularity of this company, the fame this company has reached, I think this is something that just gets overlooked. Where Tesla, yes, probably makes the best electric vehicles, there is a lot of incoming competition, okay? So they look in late August, it was announced in a note that Tesla may be losing market share in Europe to Jaguar and Audi. Furthermore, it was noted that Tesla was specifically losing market share in the higher end of the market, obviously once again pressuring gross margins. Now, if you are a Tesla bull, Piper Jaffray came out last week and upped the price target on Tesla just a week before the earnings report. I always find this very, very interesting. Like, why in the world would a bank or an investment firm come out and change the price target on a stock a week before earnings? They have no idea, just like nobody else on the planet has any idea. Maybe some of the insiders at Tesla are gonna kind of know what the numbers look like, but I've never understood why a company will come in, raise a price target on a stock a week before earnings. That's never made sense to me. And guys, I've tracked quite a bit of this. You know, I would say 7 or 8 out of 10 times the analysts end up being wrong. I mean, they just end up being wrong. I've seen it happen far too many times. But nonetheless, the firm kept an overweight rating on Tesla, and they took the price target to $386 from $372. So that is roughly $130 plus of upside. Now again, I will have to agree. I think long-term Tesla, yes, is probably going to be a $500 to $1,000 per share stock. Is it going to be in 2019 or anytime soon? I really do not think so. And guys, like I said, even if you are a Tesla bull, just do not be expecting too much fireworks out of this earnings report, because automotive is still in a slump and electric vehicles are still in a sales slump right now. So keep that in mind. Things are not moving quite as fast as we all thought they were going to. And so honestly, guys, I'm going to be real with you. I'm honestly expecting another disappointing call and another disappointing report, but I don't see the stock taking a huge dip, okay? Between $200 $250, you are very safe buying Tesla stock. I even remember in the last video I made about Tesla, I said if you're going to go long term, Tesla at 210 and 220 is an absolute steal. So if you bought in that range, guys, you would be up, you know, well over 10% right now. Could it go lower than that? Absolutely. But I really go back to 2 quarters ago. I don't think we're going to see an earnings call that disappointing again. Like I said, they did come up just very short. They did set a record with car sales. And so I am expecting a strong revenue number, okay? Again, will not be playing options going into this call. Do not want any part of it. To be a more successful trader, I like to wait for the earnings call to be over, have it all processed, have all the information in my head, then I can think about a decision shortly after that. So go down to the comment section, guys, share your thoughts and opinions on this upcoming quarter for Tesla. I would really love to hear about that. Thank you as always for watching the video, and have a great day.